Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hi everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remained on the defensive, posting a fourth consecutive negative Japanese candlestick, despite the Reserve Bank leaving interest rates unchanged at 4.35%. Policymakers maintain that the inflation remains above target and reiterated that further tightening remains possible, though the statement adopted a slightly less hawkish tone and growing uncertainty around the economic outlook. Governor Michelle Bullock stressed that another rate hike remains an option if inflation improves persistent, while the bank flagged risks stemming from tensions in the Middle East and higher energy costs. Attention now shifts to the Federal Reserve, where rates are expected to remain unchanged at 3.75%, with markets focused on any hawkish revisions to forecast or guidance when Kevin Walsh takes the realm as the Fed chair for his first sit-in. Technically, though, we can see the market's buckled. I still feel there is potential risk to the downside towards the region of 70.35 or lower to where this line is outlined, somewhere around 69, 60, 80 area. If we do get down to the bottom side of the range, a correction is seen and maybe back towards 71 to 71.5. Turning to the euro, well, the market is somewhat mixed as improving sentiment around a potential US-Iran peace agreement, but weighed on safe haven demand for the US dollar, though. However, lower energy prices could ease inflation pressures across the Eurozone, potentially reducing the urgency for further ECB tightening. The spotlight, as I mentioned, is on Wednesday's Federal Reserve meeting, so keep an eye on that. Turning to the technicals, again, they're somewhat buckled. I still feel there is room to the downside, anywhere as low as 114.5, where I've outlined here, and then possibly the correction back to 117. Turning to dollar yen, as widely expected, the Bank of Japan delivered a 25 basis point rate hike to 1%, but the yen failed to gain traction as improving risk sentiment and a broad US dollar strengthened offset the move. Dollar yen continues to trade near the top side of that resistance around 160.5 to 161, with the markets now turning to the Federal Reserve meeting, and let's see how or what unfolds. I do feel from the bearish candlesticks that we can see they're in play here that could see further risk to the downside and trigger a bull trap that may come back towards the region of 159.5 to 158.5 and reassess. Picking up from sterling, well, the market is still a little bit negative and I still feel the downside risk is there towards 133.70. A break there could see 133.25 and where I've outlined could see the bounce and possibly a correction back to 134.5. Finishing with commodities, well, we're still contained by this resistance, which is anywhere towards the region of 4,400. Overall, though, I feel the market could actually see a down test, and let's see if that's the case. Looking back towards 4,265.70 as a potential target, and the bounce following. And with oil weakening further, the market is looking back towards around that 74 to 72 area. Let's see if the market bounces from there, but the ADX is still bearish to the trend, and the RSI is getting a little bit oversold. Well, that's a wrap. Thank you for joining me, and as always, we'll cover the intraday report, and I hope you enjoy the great start of the day.